Hello, everyone. A sense of euphoria for quite a few of us who weathered many storms of crypto winter and didn't listen to all the FUD and didn't get too emotional by selling our bags, right? Shout out to each and every one of you. With that said, I had some interesting conversations with quite a few of you guys from the community on X, DMs, but more importantly, I want to give a shout out to our fellow brother Will Fix, as well as Channing Harrell, and that is this. I shared my perspective with them, and I feel as though that every action has a reaction. Supply meets demand. It's not just stocks that have supply and demand. If anything, in crypto land, oh my gosh, anything that meets supply and demand, you could see some things go parabolic, a lot more than 10%, 20%, if anything, over 100%. The key thing is understanding the direct reaction to an action. So we've already been there and done that. We're post election, and we've seen, basically speaking, a direct reaction to the election, and that is the market is really, gone in the right direction. And it seems like the United States is finally going to come on board. But some people feel as though that is real regulatory clarity. Clarity is already here, but clarity is not 100% here. And as while I'm hoping for it to happen overnight, it's not going to happen overnight. So I want to point this out. It's perspective. Listen to this perspective. Real talk before we get into the outline. And that is this. For me, in the discussion with them, I think it's really this simple. If we saw that the market reacts to, the United States seeming like they're going to finally embrace distributed ledger technologies moving forward, blockchain and so on, and we saw Bitcoin do its thing to well over 90,000. Was it 92,000? Might have been even higher than that. Well, what about the utility driven coins and tokens? We finally got a taste of that recently. So for me, if everything is an action or reaction, supply meeting demand, wouldn't it make sense that a direct reaction in light of everything, especially going into 2025 or in 2025, would be that regulatory clarity with real legislation being passed would be the fuel to turbocharge these utility coins and tokens: XRP, XLM, XDC, Quant, HBAR, Algo, and basically anything else that has real solid utility, right? Some people call these the blue chips. How about this? Sologenic. My goodness, shout out to you guys that have Sologenic. So that's where it's at. And I think for me, it's that simple, is understanding that there will be a utility run. And is this a taste of the utility run? Because let's face it, there has never been a utility run in the entire history of crypto. And would the utility run, when it finally happens, decouple itself from Bitcoin and Ethereum dominance? Guess what? I don't care if people get mad at me for saying it, because I'm okay with that. I got thick skin. Look at me. I'm like, a pretty heavy set guy. I literally got some thick skin, right? So with that said, I'm okay if I'm wrong on this, but I don't think I'm too far off. I think at some point in the future, whether it's well into 2030 and so on, we would see that decoupling of the utility run is its own separate market, if you will, that can't reference anymore the Bitcoin and Ethereum dominance. That's 81% of the overall crypto market, because that is the new player due to what? Liquidity. That's the emphasis of this video. It's liquidity. Okay. We've already built the infrastructure. We already built the framework. And if anything, it's getting institutions to finally use this. So smash that like if you haven't done so already. Consider sticking to the end of the outline and follow some of my fellow brothers in the community. A lot of you guys already follow Will Fix. Awesome. You can be followed at Will Fix on YouTube and at Will Fix 7 on X. Follow Channing Harrell. He's in the process of doing all this. He's got a lot going on with work, but he's coming back. So you look out for some, videos from him. Rue Black, especially, killing it with the coverage, live shows. Our fellow brother Underdog of the Underdog Research Channel. How about our brother Rob Mass over at Crypto Future 99? Adam of Vibra Finance. I trust a lot of these people, and if anything, I wouldn't just introduce them here on this channel. So I want to state this. I think there is a lot going on recently, and we're going to cite a lot of different research from quite a few researchers. So let's jump into it. Here we go. First thing we're going to get into is this from CoinDesk. Why? Well, look what we have here, everybody. Let's talk about debt before we get into the concept of derivatives and get into concepts of all this other new developments, because Societe Generale, basically speaking, has some new news. What is it? Well, look at this. How many times did you see other people other than myself talk about you will see in the future with regulatory clarity or hints of it that you will see examples of, projects or institutions are going to get away from Ethereum. Okay. But there is EVM sidechains. So let's not dismiss that. But Societe Generale, as of November 14th, just a few days ago, their crypto arm is going to bring its Euro stablecoin to XRP Ledger and lay out a plan going multi-chain. Why? Well, for one, they realized the potential, but the French financial services firm said earlier this year will also expand your CV to the Solana network after struggling to attract users on Ethereum. And you may be thinking, well, that mentions Solana. I thought this emphasis is on XRP Ledger. It is. Because when we get further down to it, look what it says. It mentions specifically that your coin vertible, which is your CV, on the XRP Ledger, it looks like it's going to expand across multiple blockchains, but it's going to kick in later next year. And more importantly, look what it also says. It says specifically that the firm announced plans that they would deploy the token on Solana and hope to get a better traction in the network's faster and cheaper transactions. But understanding they look forward to innovation and expanding the reach of the portfolio of digital solutions. And that's going to be done through the deployment of the XRPL. SG Forge is looking to benefit, and again, SG Forge is Societe Generale, by the way, to benefit from network cross-border payment tokenization capabilities, touting its fast settlements and low-cost transactions. Your CV will use Ripple custody services for issuance. Think about that. Bringing trusted banking-grade stablecoins like your CV into the XRPL. Critical to enabling institutional use cases. As I get further into this outline, you'll see some emphasis on institutional use cases. All right, so Societe Generale, why is this important? Well, I'm going to take you over to here because guess what? If you have studied Ripple XRP, you should know that the most important thing that stands out for Ripple is on-demand liquidity, okay? So how many times have we used examples of what XRP be used as a mechanism to solve the debt crisis, to a sense? Like, is it a tool that will solve it? Well, the answer is yes. Do we have other examples to pound home that narrative? We do. What do we have here? Another reference from Societe Generale, because on their Wikipedia page, it says that as of March of 2009, they were facing a potential loss of $11 billion, but it was averted due to the United States government bailout of AIG. And more importantly, look what would have happened. Societe Generale was to date the largest recipient of both credit default swaps, which is CDS, collateral postings at the time of $4.1 billion, and CDS payments, which at that time was $6.9 billion. Payments made possible in part by the 2008 United States government bailout of AIG. I'm telling you flat out, especially with this new administration moving forward, do you really think that we're going to have these type of bailouts? No. If anything, it's referencing that last time around, if we would have fully embraced or had the technologies, which we didn't, I get it. Bitcoin white paper didn't come out until 2009. But if we would have had this long before then, is it safe to say that if, the SEC didn't go after like Ripple, at least back then, if it even existed, that the United States government would have looked for other avenues to have mechanisms in place that would have took on the debt instead of our country, which was already multi-trillions in debt? Yes, the answer is yes. So when you see examples like this and you see what Societe Generale is looking to do, it simply adds up. And that's why I'm referencing this to you, because I want you guys to understand that taking on debt and tokenizing debt, well, that's also a huge market. Don't get me wrong, derivatives is massive, but that's also huge as well. Let's bring you to this next part. Let's give another reference because I want to pound this home. This is from Jarmo Vicky. And Jarmo, with the Ripple logo, 2 years on Reddit, has great perspective. Would XRP buys solve the debt issue? I think the answer is yes. There have been talks about Ripple being bought back by governments, central banks in order to solve the debt issues. How could it solve debt issues? If they are able to buy a low, nice bag of XRP and then drive the price up, then repay their debts with valued XRP. I guess the governments need to do it in coordinate a manner in order to succeed. Okay, back to what? Back to Société Générale's posting, literally on the 14th, just a few days ago. So this is adding up, and we're going to see more examples of this. Okay, so what else do we have? Well, shout out to one of the best in the business of research, and that is Smoke. He can be followed at SMQKEDQ. And look what he has. Literally tomorrow, everybody, tokenization begins in the European Union, November 18th. The Central Securities Depository in Prague is the first institution in the world, I'll state it again, in the world, authorized to operate DLT-based market infrastructure. Remember how he showed that reference in regards to CSD with Société Générale? This is looking good. Smoke, you're awesome. A central securities depository is a secure system that keeps track of who owns what. Stocks, bonds, other financial assets, ensuring trades are executed smoothly and, of course, safely. Starting, like Smoke says, November 18th, CSD Prague will enable issuers to register new securities directly on newly created DLT-based registers. So this is literally happening, everybody. And more importantly, where's the citation from? Marcus Media. That's a pretty decent source. And just in case you want something a little more highlighted, it's all there. It's all there. And again, starting literally tomorrow. That is massive. Smoke put this out on the 15th. And what day is it today? Well, it's the 17th. Okay. Absolutely big. All right. What else do we have? All right. We talked about custody earlier. Well, Ripple is being noted as a significant competitor in the digital asset custody space. Competition increases in digital asset custody, again from Smoke. But if you weren't aware of it, Zodiac Custody said that the growth of tokenization presents enormous opportunities as State Street and Ripple are also expanding digital asset custody services. Well, remember that whole perspective of Société Générale and saying that they were having problems with Ethereum and they wanted to go with like Ripple. They also want to go with Solana because it's a lot more faster. See what you want. State Street in the past definitely embraced Ethereum long ago. And, there's other ones from, the bigger Wall Street mix like Jane Street. Now we see this shift. All right, what about Ripple Custody? Well, they said a statement that custody is a key entry point into digital asset economy and growing. This part isn't highlighted, but I think it needs to get mentioned. Listen to some of these numbers, everybody. In the statement, quote, the amount of crypto assets custody is expected to reach at least 16 trillion by 2030 and moreover 10% of the world's GDP, which, by the way, if you don't know what these abbreviations means, gross domestic product is expected to be tokenized by 2030. So 10% of the world's gross domestic product is expected to be tokenized by 2030. Where does Ripple play in that? You already get the gist. But as such, companies need to secure, compliant, and flexible options to store the crypto. All right. What else do we have? Well, when we talked about the whole thing of the regulatory shift, understand that the SEC may settle or drop entirely existing enforcement actions. How so? Well, it's the recent election bringing shifts in leadership and regulatory perspectives at the SEC, again from Smoke. We see here that a post-election leadership change may very well usher in a more accommodating regulatory philosophy. This could lead to the SEC seeking settlements with these companies, as in Ripple, Coinbase, Binance, Kraken, and Cumberland, allowing them to operate with a clarified regulatory framework or in some cases dropping certain lawsuits entirely. I'm telling you flat out, I'm going to call it right now. Once this happens, you'll see direct reaction in the market. And if anything, your utility-driven projects, your Ripple XRPs, your X's and Quant, and you name it, Hedera, there should be a direct reaction to this. I don't think this is rocket science anymore. And more importantly, what else do we have? Well, look at this. Here's from my own research. Because if you were to go here to this PDF, which is called DLT and Tokenization in Market and Financial Markets, you see here that the Association for Financial Markets in Europe, AFME, is the voice of Europe's wholesale financial markets. AFME works to promote a robust, connected, and competitive financial system in the European Union, the UK, and globally. But they provide expertise across a broad range of regulatory and capital market issues. Now, look at this. They, as in the AFME, represent the leading global and European banks and other significant capital market players. Say what you want. I know a lot of you guys are sleeping on Clearpool. Clearpool has been absolutely crushing it. Why? Capital market ecosystems, everybody. But AFME's members are the lead underwriters of 89% of European corporates and sovereign debt. When we talk about the connectors of this, say what you want. Ripple XRP and the ones that have, we want to call it like an ODL solution or tokenization of debt, or taking on debt in the form of a utility token that would get the job done. That is going to be a huge deal moving forward, other than just derivatives. And as we get to the next part, this is from, for example, the Project Guardian update. Yeah, Project Guardian. So many people forgot about Project Guardian. I don't know why. But fixed income framework, a continuation based off of what we had introduced from Smoke. What do you see here? Fixed income framework, November 2024. Why is this important? Well, it's important is because when you see other terms here, guess what? You can understand why we did all the research about Stellar, why we did all this research about Hedera, especially when it comes to what, everybody? Tokenized bonds. Because in this update of this month from Project Guardian, they point out that the fixed income market can be grouped into two main markets, the primary and secondary markets. And how would it come together? Well, it's bonds, debt securities. Again, back to the example about debt, used by various entities to raise capital. Key types include government bonds issued by who? National governments, considered low risk, but used to finance government spending and fiscal deficit. All right, what about supranational bonds? I'm saying supranational, right? Not supernatural. Well, those are issued by organizations, and look what it says, World Bank. How many times do we, as well as a lot of other researchers, cite the World Bank mentioning that they only recognize Ripple XRP and Stellar XLM for global stablecoins? Yeah, right. Not pegged to $1 value. Okay, there's different forms of stablecoins, and of course, you even see the IMF. When you even made some connections, the World Bank Quant, you get the gist. All right. So interesting to see that. But as we get further down, look at this emphasis. Remember how I talked about, for example, liquidity? Look what we have here. Some of the covered bonds typically are issued by banks and collateralized by a pool of high quality assets, providing investors protection against issuer risk. Remember that whole statement about risk earlier? So this will lead to more liquidity. How? It's that repurchasing of the agreements referred to as repos. And you've seen that in numerous examples in regards to everything that we're covering. But it's going to allow for liquidity management to be facilitated short term in regards to borrowing with debt securities held as collateral. That is huge. All right, a little bit more about this. Let's get into the whole thing about the BIS. What do they have? Well, it's understanding where it all started. BIS, back in 2019, started a committee on payments and market infrastructures. They started the Board of International Organization of Securities Commissions. And more importantly, they have the governance arrangements for critical over-the-counter derivatives, data elements other than UTI and UPI. Again, October 2019, you may think it's silly to cite this, but you have to understand how this is all being pounded home. How? Why? Why does it even matter? Well, especially when you see statements like this, it's understanding that everything was a reaction. They cite 2009, and more importantly, they understand that they need to have over-the-counter derivatives market, and they need to have a functionality, if you will, to create a thing of global guidance on harmonization of the unique transaction identifier. Say what you want. This is where quant really stands out. So quant through ISO TC 307, through the overledger and so on, will orchestrate great harmonization for interoperability for ISO 222 related coins, tokens, and so on. And that's where it's always been at. So this, I mean, look, I mentioned ISO 222. How many times do you see this mentioned, right? We're not going to go down that rabbit hole because we've already been there. We've done that. But it's understanding where it all started. I want to take you to this. Shout out to Wall Street Bulls at W_the Jazz. So a while back, he mentioned specifically in September, a lot of you guys saw this already, but XRP derivatives gaining massive traction. And basically speaking, it's the biggest liquidity sources right now. Yeah, derivatives, and it's happening in real time. So some of you guys saw this in regards to the announcements, but I want you guys to think about this because this outline, a lot of emphasis will be on debt, derivatives, and some other key things moving forward, especially when it comes to liquidity. Let's go ahead and play this. We'll be right back. Here we go.
And if you think about a business or an institutional investor, they also want access to the things we offer. They want 24-hour access to the equity markets, they want industry-leading margin rates, a great customer experience. So over time, I do think you'll see us branching more out into serving other types of customers, not just retail, but also businesses and institutions. And to that end, we announced an acquisition of Bitstamp, a global crypto exchange. One of the things that's very attractive about that business is that it's not just international, but also institutional. It gets us access to an entirely new customer base that we're not directly serving today. I think we can do more and more of that over the next 10 years.
We are launching our own derivatives exchange in the next few months, so that's something we are most excited about and really hope to cooperate closely with Ripple there as well. In final stage of integration of really some top 30 commercial banks globally on Bitstamp as a service. So these commercial banks will offer crypto through Bitstamp. So that's definitely something we are very proud of.
All right, so you get to kind of, the idea of where we're going with this, right? So let me take it to a little bit more about this because there's some other new updates. Yes, this one's actually late last month, but it's going to pound home some key things because I did mention quant. So I'm going to pull this up on your screen. And basically speaking, what do we see here? Well, this is from regulationtomorrow.com/EU. Interesting, title. Global Regulation Tomorrow tracks financial services regulatory developments and provides insight and commentary. Remember how I mentioned the whole thing about CPMI earlier? Look what we have here. You see here that CPMI issues 2 reports offering insight into enhancing cross-border payments, posted October 16th. And more importantly, it's understanding that committee because look what we see here. So before we get into the whole thing about my example of quant, I like the statement. I will read verbatim. It states here that linking fast payment systems across borders, governance, and oversight. Final report. This final report informs owners and operators of fast payment systems, which they call FPS, when they are developing the governance and risk management of their FPS interlinking arrangement, as well as overseer, when they are defining their oversight approach. It discusses the main decisions to be taken by operators in developing the governance approach for FPS interlinking arrangements and sets out recommendations that overseers should consider when developing an oversight approach for the respective component FPS or a separate entity. Now, here's the thing. Wouldn't Ripple XRP really stand out in that regard? Yes, but also there's lots of oversight when it comes to governance and so on. I mean, even at the BIS, they have oversight of what? They have Banque de France. And for example, Basel is a supervisory committee, if you will, in regards to many different things. And we connected, Basel with, for example, quant. So it's interesting to see some of this, but more importantly, what about quant? Well, look at this. This particular update from October puts a emphasis on the promoting of the harmonization of application programming interfaces to enhance cross-border payments. And like it says, the report has 10 recommendations divided into 4 categories. Recommendations that aim at facilitating the global API harmonization process. My God, how do you say quant without saying quant? Recommendations that focus on API design, principles, and the use of existing international data standards. Recommendation to enhance the developer experience, and more importantly, recommendations to promote pre-validation, APIs, and implementation. Each recommendation has a list of potential actions that constitute practical and concrete implementation measures. The recommendations are also supported by a toolkit to asset stakeholders when assessing their current practices. So interesting to see that. And more importantly, even with the tags, United States, UK, and a whole bunch of other areas like Canada, you get the gist, all over, Europe. All right, check this out. If you were to go over to this particular PDF of trust bridges and money flows, you will see here an emphasis on a digital marketplace to improve cross-border payments. Why is this important? Well, it's understanding, again, the key terminology, because if anything, emphasis once again on debt. All modern forms of money are based on credit relationships and represent claims and liabilities between related parties. Even central bank money is a liability of the government from the standpoint of a consolidated balance sheet and is ultimately backed by the sustainability of course, public debt. The net present value of future tax revenue. Inflation from lack of sustainability would undermine the value of central bank money. Commercial bank money represents a credit relationship between the bank and, of course, its depositors, and non-bank money represents a claim by the customer on the non-bank issuer. In contrast, unbacked crypto assets such as Bitcoin, think about this, please focus on this, are not based on any credit relationship and are not liabilities of any entity. In the realm of credit-based money, trust plays a key role. And what do we always put emphasis on when it comes to the quant network? It's not just about the internet of value, it's also about the internet of trust. The holder of money must trust the issuer to be resilient and well governed. The claim to be legally sound, sometimes across multiple jurisdictions, and the underlying assets, again, key thing is assets, or balance sheet, are to be safe and liquid. The issuer must trust the holder of money to satisfy AML, which is anti-money laundering, and also CFT, and other compliance rules. So, CFT is counterfeit and terrorism, all that stuff, right? So trust is therefore a directional concept from issuer to holder and vice versa. All right, so interesting to see that. All right, what else have we got? Well, shout out to this lady. I never know how to pronounce her name. I don't know if it's Amy Lee or Amalia, but Crypto Barbie. So shout out to her. She says, wow, the following Ripple RLUSD trading pairs are now on CoinMarketCap. Now, she did report this a while back. Don't get me wrong, just on, actually not that long ago, right? November 15th. But I want you guys to understand, remember that perspective I was sharing with you guys about, like, for example, Bitcoin and, supply meets demand? Well, understand with Bitcoin, BTC, you have so many pairings, right? So many pairings, a lot of tether pairings, especially. Well, what do we see here? We see here, excuse me, I'll leave it right there, these new pairings, RLUSD with Solana. And look what it says, stablecoin XRP. XRP? So back to the whole thing of what? Back to the whole thing of the World Bank reference. Some people finally wanted to see some of these examples. Here you go. What about RLUSD Solana? Right. RLUSD with wrapped Ethereum. Right. Even Pulse Chain. Shout out to our brother Adam, Vibra Finance. He states that this is the now money. I'm going to look more into that myself. But it's understanding all of these things means more what, everybody? Liquidity. And that's the main point. All right. A little bit more about this because I want to just talk about this. In my own notes, here's some key things to understand. So when we talk about this, like, these new pairings that you're seeing, again, understand the perspective of enhanced liquidity. By listing RLUSD trading pairs, of course, on CoinMarketCap, Ripple is expanding, of course, liquidity of RLUSD. This means there will be more buyers and sellers, of course, for RLUSD stablecoin, but that would lead to a more stable and efficient form of trading. Increased liquidity would also attract more institutional investors, which we've seen, right? We just got the example of Société Générale, and we're going to see more. But they often prefer to trade assets, of course, with high liquidity. Yes, no kidding. So I thought I'd point that out, which brings us to this next part. And shout out to this guy. I haven't cited him for a while, but he's an awesome guy. So shout out to Riz at Riz XRP. Give him a follow. We've been following each other for quite a long time. And God bless you, bro. That's awesome. So look what we have from Riz. He mentions XRP to enter 1.2, not billion, not trillion, but quadrillion derivatives market. Okay. Earlier in August of 2023, Ripple, a crypto payment solution, announced its membership with International Swaps and Derivatives Association (ISDA). Strategic move came as a pleasant surprise to XRP community members as it positioned XRP to fully partake in the massive 1.2 quadrillion derivatives market. I'm telling you guys, this is happening. And more importantly, what else do we have? Well, you see a little bit of the citation from Rohitku, ISO 222, let's do it. Another great guy you should be following. And he can be followed at ROHITKU 24694375. And like he says, from November 25th, 2023, it's not time sensitive, everybody, but this is pounding home everything that's happening right now. That's why I'm bringing it to you. If you really want to make money in blockchain, then you should be looking at derivatives. See how this is literally unfolding before our very eyes. I think we're at the start of something massive here, hopefully soon. So let's go ahead and play this. Here we go.
This. If you're interested in blockchain and you want to make money, forget about sending money back to your uncle in France. This is where you should be thinking. This is the size of the entire economy of the world right here, GDP. This is the notional principle of all derivatives, okay? These are all forwards, futures, and options, and these are all derivatives except interest rate swaps. This right here, interest rate swaps. Biggest universe that most of you have never heard of. Millions of lawyers, millions of traders, millions of accounts, all that can be put on the blockchain, okay? And all this clearing system and settlement system, which we took, Dodd-Frank is like this thick, this much of it has to do with clearing and settling of swaps. Okay, it's a nightmare, it's a mess, and we can take this whole system and simplify it with distributed ledgers.
Okay, so great find. Rohitku does it really, really well with some of this stuff. So shout out to our brother Rohitku, ISO 222, let's do it. And I'm going to take you to this next part, because what you saw here on the flashing of some of this was like CFTC and so on. So what other examples we have? We talked plenty about Stellar, a little bit about Quant. What about, plenty about XRP, plenty about, Quant. What about Stellar? All right, great question. Look at this. Do we have something somewhat new? Well, the answer is yes. From Crypto News Flash. Remember Franklin Templeton? Of course you do. They got something new for you. If anything, I'll keep it on this. So it says here that Stellar secures 1.7 trillion move as Franklin Templeton embraces XLM network. More importantly, the 15th of November. Yes, just 2 days ago. All right, let's jump down to this key highlight. Franklin Templeton, a world-renowned financial investment manager, has declared his intention to deploy blockchain tech to assist in managing transfers worth 1.7 trillion in assets. The firm has chosen the Stellar network for this revolutionary undertaking that promises to bring substantial transformation in terms of cost and operational benefits, reported CNF. Now watch this. I did share a little bit of this before, but if you were to go over to this particular document from Stellar, look what it says. Coinbase Derivatives LLC is registered with who? The CFTC, which stands for U.S. Commodity Futures Trading Commissions, as a designated contract market. Derivatives contracts are not suitable for all investors. We get it, but watch this. because this also pounds home this. And this is from Cointelegraph. Stellar joins CFTC's Global Markets Advisory Committee as one of 4 crypto organizations. Stellar Chief Operating Officer Jason Chipolia said the foundation would bring the unique perspective of Layer 1 to the committee and highlight stablecoin use cases that age incredibly well. All right. What about somebody else in regards to derivatives like XDC? Well, Kraken, for example, introducing the multi-collateral derivatives wallet. The multi-collateral wallet allows you to use a variety of collateral types to manage all of your positions. So as we know, even with XDC, they really stand out in regards to derivatives. If you were to go over to Kraken, you will see that they have the whole thing of XDC derivatives. And more importantly, it's understanding like perspectives. What do you see here? This is straight from XDC News, and basically speaking, it is that derivatives market. So I'm going to blow this up a little bit bigger. Yeah, time to integrate hybrid blockchain technology. You see, for example, U.S. money supply. Like it says, 20 trillion. In reality, a heck of a lot more than that. But, world GDP, 80 trillion. Total value of the world's stocks and bonds market, 118 trillion. And then what do you see in regards to derivatives? Well, like it says, 1.4 quadrillion. XDC understands it. If anything, they probably understand it better than most. All right, what else do we have? Well, as I take you over to here, I want to show you guys something because Hedera has been doing it a lot recently. What are they doing? And especially, they have anything going on with also derivatives? Well, it's a different approach, everybody. This comes from Crypto News Flash. And as you see here, it mentions Canary Capital files for the first Hedera HBAR spot ETF, offering investors direct exposure to HBAR and bypassing derivatives. Interesting approach, right? A different one, right? So interesting to see that. Also interesting to see that Canary Capital did in fact file registration with the U.S. Securities Exchange Commission, SEC, and how they claim that this fund aims to give investors, like I said earlier, direct exposure to Hedera HBAR. So here's the thing. Bypassing derivatives and futures to hold only the digital currency itself, I mean, for a lot of people, they like seeing this, and they like the idea it says HBAR, right? And not like, for example, a stable coin. So say what you want, that is big. Moving forward, I mean, we'll see how this pans out, but really interesting to see the native asset is the bottom line. All right. So a lot of research and so on in regards to the focus on liquidity. Why did I put so much emphasis on liquidity? Well, back to this from Andrew Carrier of the Quant Network. Reported on November 11th, 2024, UK Finance's new digital assets and money event. Think about this for a second, everybody. It says specifically here that what customers care most about today is liquidity. Transactions should be easy. Right. I would agree with Andrew Carrier about that because it's understanding that you already have everything built. Whether it's Ripple XRP, Stellar XLM, Zenfin XDC, Quant, Hedera, Algo, you name it. Now that we have that built, well, the emphasis should be on liquidity. Understand that when I talk about, and I'll come back in the frame, when I talk about the whole thing about the significance of Bitcoin, Bitcoin represents the largest liquidity pool out there, if we're just going to be blunt about it. So if customers care most about liquidity, well, then we have examples of institutional liquidity coming in. And I think they're going to come in, at the masses. This technology moving forward is definitely where it's at. The other thing I want to jump into is understanding that there's more perspective about this. And look what it says. At the end of the day, we need the bottom line. Money is the bottom line. Money ultimately exists to enable individuals and institutions to transact as seamlessly as possible. It was created to replace the bartering system and its obvious inefficiencies. With that in mind, it's no surprise what customers, consumers, and companies care most about today. And that's liquidity, everybody. Transactions should be easy. That's what drives growth. Think about it. What about growth as far as market cap and expansion to get to mass adoption? Exactly. And in the context of liquidity and transactions, real-time settlement would be the ideal. The providers who will thrive in the digital age will be those that can deliver liquidity simply and securely. Quote, a payment is a payment is a payment. The adage goes. Maybe not all payments are created equal after all. Completely agree with that statement. So with that said, I want to state this. I am fully aware of some of you guys pointing out that my channel is being attacked, and it's being attacked by naysayers. Guess what? Those same naysayers have been attacking me for the last couple of years. What's my response to that? My response is this, and here's your key word. It is basically Matthew 5:44. There's your homework. Read it if you choose to do so. I'm not forcing it on you, but if you listen to the whole outline, just type in either Matthew 5:44 or just type in M544, and I'll know that you listen to the entire outline. As the saying goes, know what you have, know why you hold it. The research trumps FUD 110%. Appreciate you guys listening to these outlines. Follow my fellow brothers, fellow brethren of researchers and content creators that I mentioned earlier. You'll be glad that you did. Solid people with solid research. Thanks again, everybody. We'll see you on the next one.
If managing your crypto feels like solving a puzzle, it's time to switch to Decent Wallet. Say goodbye to complicated setups and hello to Decent Wallet, the hassle-free solution to your digital currency needs. With just a few taps, you can manage, track, and secure your crypto with unmatched ease. And here's the best part. Grab your Decent Wallet at a discounted price by using the referral link below. Don't miss out on making your crypto experience smoother and more secure.